Good morning, ladies and gentlemen. On Monday of this week, HMRC published 6 consultation documents covering some 250 pages in length about the new proposed Making Tax Digital system. We've had self-assessment for approximately 20 years now, and when the self-assessment system was introduced, it was a revolution in the way that taxpayers interacted with HMRC. The new Making Tax Digital proposals are a seismic shift again in how the taxpayer will deal with HMRC. The 6 consultation documents that came out this week primarily relate to the self-employed, people in partnerships and landlords. We're expecting a series of other consultation documents later in the year in relation to companies. The Making Tax Digital programme is all about trying to use technology to ease the way in which taxpayers communicate their tax affairs to HMRC. The consultation documents indicate that for self-employed people, people in partnerships and those landlords will take effect from the 6th of April 2018. This is much earlier than had previously been expected. Limited companies will have to engage in the Making Tax Digital programme by the 6th of April 2020. So what are the key components of the Making Tax Digital proposals, and how does that contrast with the current self-assessment system? In the current self-assessment system, the taxpayer files a tax return within 10 months of the end of the tax year, and the filing of that tax return triggers the payment of tax on 2 dates during the course of the year. The Making Tax Digital proposals see this fundamentally change. Instead, the taxpayer will now file 4 quarterly tax returns each year of the business's income and expenditure, or rental income and expenditure in the case of landlords. In addition to filing this, if the business is VAT registered, the business will also have to file the VAT control account, and this control account will list all of the input tax and all of the output tax in the particular quarter. Furthermore, the business will also have to file a bad debt account. Now, quite clearly, this is going to mean that most businesses will have to use accounting software to be able to make these filing requirements. This is a major challenge because I would say that probably 90–95% of our small business clients do not use accounting software and probably keep their records on some form of Excel spreadsheet. Forcing people to go onto some kind of accounting software platform is going to be a major problem. So not only will you be filing more frequently, you'll be filing a lot more detailed information. The next major change with the Making Tax Digital programme is the fact that traditionally accounts are prepared on accounting principles, and indeed the Taxes Act require this of businesses. The Making Tax Digital programme anticipates that more and more businesses will be allowed to prepare their accounts on a cash received and cash paid basis. This is a fundamental change to the way that tax returns and accounts are currently prepared. The idea behind this is that it will make the system much more easy for small businesses to file their quarterly returns. As you can imagine, filing 4 quarterly returns, which perhaps you might do on your own without the assistance of an accountant, could provide a challenge in the sense that your figures may require adjustment by your accountant. The Making Tax Digital programme anticipates this difficulty by allowing you to file effectively a 5th quarter for the particular year, and that has to be filed within 9 months of the end of the year. And this 5th quarter would incorporate any accounting adjustments that your accountant may choose to make. Notice though that it's now a 9-month filing deadline, not the previous 10-month filing deadline under self-assessment. So that's a fairly fundamental change. The other major change that the Making Tax Digital programme anticipates is that currently the taxpayer will make 2 payments of tax during the course of a tax year. Under the new system, tax payments will be made quarterly based on the quarterly return. Indeed, actually the system will allow the taxpayer to pay monthly if they so choose, or even more frequently than that if that's what they want to do. Again, this is a fundamental change from the current system. The consultation documents will no doubt see revision after the consultation process has been concluded, but it's highly likely that those fundamentals of the system will remain in place. And these are going to create some major challenges for both accountants and businesses. Particularly, I think, the filing of the quarterly returns. Quite clearly, a business wouldn't want to estimate 4 returns, hand the records over to their accountants for the 5th quarter adjustments, because HMRC will then clearly see the year-end adjustments that have been made. I think it's much more likely that businesses will ask their accountants to cast their eye over the figures each quarter and get them slightly more accurate. Inevitably, this is going to mean an increase in the workload of accountants and the cost base, therefore, for lots of small businesses. I hope you found this little update useful. I'm sure that we'll see lots more practical problems emerge as the consultation process continues, and we plan to keep you up to date as those changes and amendments to the consultations find their way into the legislation. Thank you for listening.